Looks like all right, guys. Good to know. Good to see you here. My name is Silas Peters from Trades Trending, and it looks like we are good here with audio visual. So I'm going to go ahead and get started here as to not waste anybody's time. I want to thank Fausto and the CTU team for having me on. Always a pleasure. And I'm very excited about this presentation. And what I call this here is my 15-minute trading blueprint. Now, again, my name is Silas Peters. I'm the founder, head trader of Trades Trending. And the strategy I'm about to be sharing with you today is a strategy and system that I've been using for nearly 20 years. So think about this. If I've been using this for nearly 20 years, it means that it probably works if I'm still using it. And that's exactly the case. And most importantly, about all of this is its simplicity. This is a truly mechanical, stress-free, emotion-free trading method, can be applied literally on any market or time frame. So let's get right to it. Now, before we begin, we must take a quick moment to read the risk disclaimer. We know past performance is not necessarily indicative of future results. There is substantial risk of loss associated with trading. I only risk capital should be used to trade. So know that we know there is risk involved. Take that very seriously. Okay. Now, I'd like to ask you, what does everybody trade? Okay. What does everybody trade? Do you trade stocks? You trade options, futures, Forex? I trade these actively: stocks, options, futures, and a little bit of Forex in some prop accounts. But I like to see what everybody is trading. Trade stocks. We have options in stocks, some futures, a little bit of Forex, really all over the board. And I just like to kind of see what kind of audience I'm speaking to. But regardless of what you trade, this strategy will work, okay? And so what I'm going to share with you today is highly accurate, works in all markets, as I just said, all time frames. It's 99% mechanical, perfect for small accounts. And again, the most importantly thing is it's simple, okay? I've used this strategy with $2,000 accounts, $20,000 accounts, even $100,000 plus accounts. I've used in every market situation, from the '08 financial crisis to roaring bull markets, traded through debt crises, government shutdowns, presidential elections, flash crashes, you name it, from scalping and intraday trading to swing trading. And you can do this with small or large accounts. It can take as little as 15 minutes a week if you wish. Now, before we dive into all this, let me introduce myself, who I am, and why you should listen to me. Other than that, I'm a simple dude. I'm a family man who thoroughly enjoys being a two-girl dad. I've got a strong passion for the markets, golf, cooking, the outdoors, and Alabama football. But this is where it all started, the great city of Chicago. It's here where I cut my teeth in the commodity markets right out of college, working at the Chicago Board of Trade. Very quickly, I found myself working the Asian, European, early New York session trade desk, trading across the CBOT, Merck, NYBOT, NYMEX, London, and Asia exchanges, trading for hedge fund, banks, commodity trade advisors, handling enormous size, 300 lot bond orders, 400 lot big S&P orders, 100 lot gold option orders, 250 lot Japanese government bond. And it was such an eye-opening experience to see how the biggest traders, market makers, and funds were trading and making decisions. So I did this for a while, soaking up everything I could, anything and everything market related, acquiring multiple futures and securities licenses. I was a sponge. But then my college sweetheart, and now my wife of nearly 20 years, she talked me into coming home to settle down and start a family. So we headed back down south. I immersed myself into the quieter side of finance, helping manage equity and fixed income portfolios in this glass building. Then did some investment consulting for a private $2.5 billion family office. And then during this journey, I managed to stay in the market, specifically the commodity markets, running and owning some brokerage units. And then finally, starting my publishing brand in 2016. And it's really here where I found my real calling. It's here where I teach students across the globe different ways they can generate the skills necessary to trade, manage portfolios, and turn their trading around in the right direction. And today, I want to help you too. But let's quickly go back to the journey. My journey wasn't always easy. There was a learning curve, several obstacles and hurdles on the path to where I am today. The first step, obviously, learning. School does not teach real life experience in the markets. I made money, a substantial amount, Was I lucky? No, but ignorance and greed cost me my profits. I blew up an account and I blew up others in what I like to call revenge trading. And those were extremely humbling experiences. I almost gave up, almost quit. Nothing seemed to work. I seemed to always be on the wrong side. But guess what got me back in the game? Remember, I was in a dark place, but I went back to the very first trading setup I learned almost 20 years ago. I got back on track, started banking wins again. I'd gone off the reservation looking for that elusive holy grail, but my journey ultimately led me back to where I had first started. So I went back to my roots, worked my repeatable process to find consistency. Now, who here is or has been a victim of paralysis analysis? I mean, I'm raising my hand, per Wikipedia, it's a state of overanalyzing, overthinking situations, so a decision or action is never taken, in effect, paralyzing the outcome. So I'm sure we've all been there where we've done all the research analysis we thought we could do. We got the T has been crossed, the I's have been dotted. You got your finger on the mouse, get ready to pull the trigger, and then something happens. Some line crosses this line. Maybe Jim Cramer says sell rather than buy, and then you freeze and then you miss out on an opportunity. Well, I'm going to try and eliminate this problem for you right now. I think it does creep in regardless of where you are, but we're going to try and simplify the process. So that is my agenda and promise to you, is that we're going to learn a simple mechanical setup together that is repeatable regardless of the market or time frame. Now, we know that a market or markets do not go straight up or straight down forever. They go up and down, ebb and flow in waves. And what we're going to do is look at these waves and how to get on the right side of the moves before they're made. I think the most powerful thing that can be done is show you proof. As they say, proof is in the pudding. So let's learn about this exciting strategy. I'm going to show you exactly how to identify these moves here in Halliburton. This is a daily chart of Halliburton, and you say, okay, this is, 10% move. This is 8% move, 12% move. And it may not sound sexy, when your penny stock newsletter is talking about gains of, 1,200%, or some CNBC talking heads is talking about Tesla options. But these moves add up. $1,100 on 100 shares, $600 on 100 shares, $2,000 on 5 option contracts. Here again, Bristol Meyer, we're talking a 3.5% move, talking a 6% move, 9% move, clear mechanical clean setups. Here we are in Lockheed Martin, +5, +6, +6. Either selling the stock, selling bear calls, buying puts, buying the stock, buying bull calls, selling bull puts. Gold futures, 30-minute chart here. This is $800 a contract. This is $450 a contract. Here we are on a 5-minute chart of the E-mini S&P. You've got 3 points, you've got 8 points, 6 points, 10 points, all in a single session. So you probably start to see the potential here trading the basic ebbs and flows. This is a 30-year bond, 610 tick chart for those that like to scalp. 4 ticks here, 7 ticks here. That's $218. I mean, we'd be happy with $218 a day, $500 a day, $50 a day. This pattern is responsible for identifying these setups and these moves before they happen. All right. Now, with what I've showed you, could it be this simple? Well, we know trading is not easy, but it can be simple. You see, when I got started, I was probably a lot like you, sifting through hundreds of different strategies, systems, setups, you name it. I tried all kinds of stuff. Indicators, red light, green light systems, Greeks, alert services, robots, most of it was garbage. But the single most important part of this journey was when I learned to keep it simple. Once I got rid of the clutter, the fancy blinking gizmos and indicators, and started focusing on pure price action led me to seeing one simple pattern over and over again. And guess what? That is when it clicked. It all started clicking. So if you are sitting here as a new trader or a struggling trader or even an experienced trader, I'm about to teach you my foundational go-to strategy that got me from a struggling trader to a winning trader. I'm telling you right here, right now, that this is a simple mechanical setup that anybody can learn, and you will keep this in your trading arsenal for years to come. And at the end of today's workshop, I'm going to make you an offer you can't refuse, how you can join my team with a specific set of tools and a plan that will help shortcut not only your learning curve, but also the time you need to spend looking for quality setups. So let's get right to it. The price action pattern we're going to be discussing today is, drum roll please, the 1-2-3 pattern. Who here has heard of the 1-2-3 pattern, or the 1-2-3 top or bottom pattern? I would suspect most, if not all of you. This is nothing new, but in one of the most fundamental technical patterns in the textbooks. We're talking technical analysis 101, but highly, and I mean highly, overlooked by most traders. Why? Because of its simplicity. Now, the setup is price action based, and guess what? Price action is king. And speaking of king, did you know this? Did you know that McDonald's and Burger King have different ways of choosing where to open new restaurants? McDonald's does tons of research. They look at maps, population counts, traffic pattern, competitive analysis, on and on until they find the perfect location for a new store. Burger King approaches it differently. They wait to see where McDonald's opens up a store, and they open one up across the street or down the block. They get the same results with a lot less time and effort. So when we relate this to trading, we can let all of the Wall Street traders and funds and institutions do all the research on which markets to buy or sell. All we have to do is look at price action, which takes into account all their fancy processes. Basically, we're the Burger King to Wall Street's McDonald's. Now, again, setup is price action based. The pattern is comprised of a low, a higher high, a higher low, and a break at that higher high. When we're going long, inverse of short anticipates a change in trend from up to down on a break below the 2 or B point, anticipates a change in trend from down to up on a break above the 2 or B point. Now, the strategy usually occurs at the end of trends and swings, can be an indication of a change in trend, can be found within a traded range. And I will say that it works extremely well when the pattern sets up at significant areas of support and resistance, or supply demand, other technical patterns like head, shoulder, tops and bottoms, and more. So let's take a look at the basic mechanics. This is the 1-2-3 bottom. Now, when we are looking for 1-2-3 bottoms, we are bullish or looking to go long. We're expecting that stock or that market to go higher. Okay, so we're buying stock, buying call options, expecting we're bullish, right? And so when the market trades down, finds that lowest low at support and pulls up, we get our number 1. As the market retraces higher and then pulls back, we get our number 2. And as the market stops printing these higher lows and pulls back higher, we get a number 3. And so 1-2-3 bottom traders here are looking to go long on breaks or closes above the number 2. We use 1-2-3 top, same strategy, but inverse. When we look for these patterns, we are bearish or looking to short that market. Okay, so as the market trades higher and puts in the last high, we get our number 1. As the market retraces lower and pulls up, we get our number 2. And as the market stops printing these lower highs and pulls down, we get our number 3. 1-2-3 top traders are looking to get short on breaks or closes below the number 2. Now, one of the great things about these setups is we won't have to really worry about the first 2 legs. We don't need to be glued to our screen unless, maybe we're hyper scalping on a tick chart. But all we have to do to cash in on these bad boys is to spot when it's about to go past the number 2 point. Okay. Now, let's not waste any time because seeing is believing. Let's look at some chart examples. Now, I'm going to let you guys and gals read all this over here on the right, and we're going to look at the chart. Now, this is a chart of the 6A, the Australian dollar futures. If you don't trade futures, you could look at FXA, the ETF. Forex traders could look at Aussie USD in the Forex market. By the way, we have a live setup right now that we are in based on this pattern. So you'll notice that we're looking for our number 1. That's indicative because of the 52-week high. Now, it doesn't have to be a 52-week high or a 52-week low. We'll talk about ways later to dial that in a little bit tighter to find more opportunities, but we'll just use that for example purposes. So we get our number 1 point. Market retraces down, pulls back up. We get a 1, 2, 3. Now, this price action could have traded all the way up here as long as we didn't take out the number 1 high, but we retraced by about 4 or 5 bars and then stopped. So we now know pretty much all of the ingredients of the recipe. We know where we're getting short. We know where our, but we need to ask ourselves, what about the other part of the ingredient? Where's my stop? Where's my risk? Where am I taking profits? Where are my limit orders? All great questions. So our initial risk is going to be above the high of the one. Our initial target is the distance between the high of the one measured to the low of the two and then measured down. So it's an equal distance. And as you can see, it's a 1-to-1 risk to reward. That's okay, but we can do better, okay? So it's very important to let the market materialize in its anticipated direction. So as we start breaking down here below these swing lows, then we can adjust our stop to the next logical area, which would be what? Above the number 3 high. So we've quickly cut our risk now by 75%, and the market comes in and reaches our $2,200 per contract price objective. We look at this setup here. This is a daily chart of Walmart. We've got a 1, a 2, and a 3 right here. We know everything we need to know where 98% of other traders are scratching their heads. Well, where am I going to get in? Where's my risk? Where's my targets? We know all that well in advance. We know we're looking to get short on breaks or closes below the 2. We know initial risk is going above the high of the 1. We know our initial target is a distance between the high of the 1 measured to the low of the 2, measured down, which is about $5 in this example. Okay. Now let's look at some 1, 2, 3 bottom examples. This is a 15-minute chart of the E-mini S&P. You say, hang on now. How are we looking for 52-week highs or 52-week lows on an intraday chart? We're not. So on an intraday chart, whether it's a tick chart, a 1 minute, a 5 minute, 15-minute, whatever it is, we're looking for what we call session highs and session lows. So if you start your trading day, let's say in the 9:30 New York Eastern cash open, maybe it's the last hour of the day, maybe it's the middle of the European session, wherever you sit down and start your trading day, you are looking for new session highs and new session lows. So here we have a new session low that gives us a number 1 starting point. We have 1, 2, 3. Let's quickly talk about entry points. There's a couple of different entry scenarios that you can consider. So an aggressive entry model may be to take the initial break above the high of the number 2. So you work a tick or a stop, a tick or 2 above the high, you're triggered into the trade. Or you can wait for what we call a retest or a second pass or hook back above the breakout area. So this right here, sometimes the market will trigger up, go hit target, leave you at the train station. Hey, that's fine. There's no need to get your feelings hurt. There's plenty of other trade opportunities that we can take advantage. But sometimes the market will tick up, get you into the trade, and then decide to roll back over and stop you out. So this hook, the second pass or hook back up, can be extra confirmation if you choose to work that. Okay. Well, let's look at a weekly chart of Apple, a hell way to catch some longer term position type moves. Here we can see we make a multi-week low. We also have a double bottom. Market comes up, trades above the number 2 high on this large bullish candle. Market goes sideways for a few weeks, comes back down, retests, hooks back up. That's our confirmation to buy Apple. How do we do that? We buy Apple stock. We can buy bull call spreads, sell bull puts, whatever your flavor or style may be. Now, hate to burst your bubble, but they don't all work. There's no holy grail in trading or life, but I know you understand that. We're all big boys and girls here. Here we have a market grinding higher. We have a trend line break, new number 1 point, 1, 2, 3. Those aggressive traders are getting short on the initial break. The alternative wait and see traders are waiting for the pullback, second pass entry. Here you're in. You're up maybe 1 or 2 points. I'm not real sure. And then as far as money management, if you exercise any money management as you started breaking swing lows, you're stopped out here as the market retraces and stopped out above the number 3 high. You sat on your hands and didn't do anything. Okay, that's fine too. You get stopped out as the market takes out the number 1 high. But guess what? We actually have a new setup. This high is greater than this high, so we get a new 1, 2, 3 right here. There's your shorting opportunity. Ends up being a profitable trade. Now, here's an example of a no trigger or avoided trade, and I'll show you in a second why I love when these set up. So it's not neither good, bad, nor ugly, right? We got a 1, 2, 3 pattern. We're looking to get long here, but the market says, nope, I'm going to go lower. We take out these lows. We start to count over. 1, 2, 3. Looking to get long right here. The market rolls over, takes out the number one low. 1, 2, 3. Finally are able to get long here on this third attempt for a profitable trade. Now, let me tell you what is likely happening in this scenario. Let me see who gets the gold star in their crown today. If price is doing this, making lower lows, lower lows, lower lows, and let's say we added an oscillator like an RSI, stochastics MACD, and it's doing this, which is making higher lows, what is that called when you have price making lower lows and an oscillator making higher lows? That is called bullish divergence. All right, T-Barfy gets the gold star on his crown. So that can add a little extra icing to an already high probability setup, okay? Now, pattern management. Again, the confirmation of entries on a break above the 2 or B point for a long or a close below the 2 or B point for a short. Exit strategies. If you're only trading one contract, one share, one option, one futures contract, whatever it is, I would say go for the distance between the number 1 and number 2 point. It's uncanny how more often than not, let's say we have a 1, 2, 3 pattern that looks like this, and we're looking to go long, and our target's up here. It's uncanny how more often than not, the market will come tag that almost to the tick and then reverse. Okay, we've got hundreds, if not thousands, of examples of it doing that. So if you're trading multiple shares, multiple contracts, I'd say, hey, take a third, half, 2/3 off right up here, jack your stop up to break even, put yourself in a risk-free situation, and then let the trade ride. And then you manage the trade however you manage. I mean, whether it's par SAR, whether it's supply and demand, price, 2 to 3 bar candlebacks, they come moving averages, they come a dime a dozen. You got to figure out what works best for you. I like to target good old fashioned swing points in the market, and that is where I determine my exit points on my balances. Okay. Now I'll show you this setup works on any market, whether you trade pips and Forex, Pepsi stock, potash or pot stocks, pork bellies, or the Polish or slow tea. I've also said and shared and showed how this works on any time frame, whether it's a tick, 5-minute, 1-minute, 15-minute, hourly, daily, weekly, and more, and on any trading style. So what is everybody's trading style? Are you a position trader? Are you a swing trader? Are you a day trader, scalper, tick trader? Type in the chat. Let me see what your style of trading is. A lot of day and swing, scalp, not trading, position. Yeah, and the reason I like to ask that is because you've got to determine what your bread and butter is. I'm not sitting here today and telling you this only works on a 5-minute chart of NASDAQ, or this only works on a daily chart of Alibaba, because it's not true. We're trading price action. It doesn't matter if you're on a tick chart. It doesn't matter if you're on a 5-minute chart. It doesn't matter if you're on a daily chart or a weekly chart or what ticker. Okay, you trade tulips and tea leaves if that's what you trade. These are some of my favorite time frames. I also like the 1 and 2 minute time frames for intraday. The hourly and 4-hour and the daily, those are my sweet spots there for intermediate term swing trading. But figure out what works best for you. Not everybody can nor has a desire to look at the markets all day. Okay, they might want to look at it at the end of the day. Maybe you're working 9 to 5, all right? And so you'll find something that works best for you. Now you've seen the proof. Let's look at some real trade examples. Not to say what we've shared were fake. They were real trade examples by all means, but let's look at some trade ideas and examples we've utilized in some of our services, okay? Again, you guys can look at this stuff over here on the right. I'm going to look at the chart and work left to right. So here we are. We have, again, a new number 1 point. Why? That's a 52-week high. And we can see we have a small 1, 2, 3, small but still valid. And we already know everything in advance. We know where we're looking to short. We know where we're looking to get in, right? We know where our initial risk is above number 1 high. We know our target is the distance between the high of the 1 measured to the low of the 2 measured down. Market breaks down. reaches our $3 or $3,000 per contract price objective. And so then I get asked all the time, does this work in ranging, sideways, consolidating markets? Well, the answer is yes. Here we have a 1, 2, 3 pattern right here, and the market rises, ends up being a nice profit. But I'm really looking for new highs or new lows. I'm not really interested in trading the junk in the middle. And so here we get a new number one high. How? Why? Because this high is greater than this high. We have a 1, 2, 3. Okay. And now this was a what we call the perfect marriage in trading. So we have a high probability 1, 2, 3 top pattern that I've already taught you. And we're at a time of the year from a seasonal perspective where crude and energy markets in general typically trade to the downside. Okay. And so here we break down below the number 2. If you didn't catch it the first day, you've got 1, 2, 3, 4 days of retest to get into this trade. We break down, we reach our $4,000 per contract price objective, and then the market ends up trading down another $20,000 a single contract. And all we're doing is trailing the market until we either get stopped out or maybe we have a reversal. There's a potential 1, 2. There's a potential 1, 2. There's a 1, 2, 3. But we never break above the number 2. And then the market sells off another $10,000 per single contract. We finally get a reversal. 1, 2, 3. Here's where we get long. And the market trades up and meets our $5,000 per contract price objective. You can trade USO, spreads, minis, micros. And then here, here are, again, more examples of just trading ebbs and flows. A $6,000 move, a $9,700 move, a $4,500 move. This is a chart of gold. This is actually this is GLD ETF that tracks gold futures. Here we are again. 1, 2, 3. We're looking to break down below the number 2. We reach our $4 profit objective, and then we trade lower. People are going, well, what next? Where's gold going to do? Let me go look at my Chinese newsletter subscription, looking for the next prediction on gold. Who cares? We're trading price that is in front of us. So here we have a new 1, 2, 3. 1, 2, 3. We break above, reach our $2 profit objective. Again, here, what about the stuff in the middle? Did you miss this? Did you take it? Maybe, maybe not. Here you have a 1, 2, 3, trades higher. Here's a 1, 2, 3, trades lower. Nice trades. Pat yourself on the back. I'm only looking for new highs or new lows. We finally get a new number 1 here. 1, 2, 3, gap higher 2 days in a row. You wouldn't see that on a futures chart, but that's okay. We come down, we hook back up. That's our confirmation to get long. How? We buy gold futures. We buy minis, micros, GLD, call options, sell bull puts. Again, whatever your style is. Here we are in gold. $19,000 move, $8,000 move, $24,000 move and climbing. Let's look at another example. I know this is becoming redundant. I'm just trying to hit home the fact that these happen over and over again because all we're doing is trading repeatable patterns. Okay, here's a delta, we long, there's a short, we have a gap down. I don't trade these. I've got students though that will aggressively buy put options here. We get another opportunity. This high greater than this high. 1, 2, 3. We sell off. We get a small retracement. $8 move to the downside. New low. 1, 2, 3. Trade higher. We come back up. $8 move to the upside. Pretty amazing how this stuff works, right? Okay, Delta Airline. Here we are. $8 move, $13 move, $5 move, $8 move. Could you trade simple calls and puts with this? Credit spreads? Absolutely. Forex traders. 4-hour chart of the CAD Swissy. 4-hour chart of the CAD Swissy. Here we have a multi-session low. 1, 2, 3. We get a move up here on the break above the number 2. We come back down hook, and get long. 70 pip profit objective. You're saying, well, what next? Well, you're not doing anything until you get a new pattern. 1, 2, nope. 1, 2, nope. 1, 2, nope. 1, 2, nope. 1, 2, 3. Here's our last pattern. We break down, we come up, we hook back down, hit our 40 pip profit objective. Here we are again, 80 pips, 70 pips, 35 pips, 70 pips, 55 pips. My day traders out there, 5-minute chart of the NASDAQ, new session low right here. 1, 2, 3. We break above, we come down, we hook back up, hit our 13-point profit objective. This is a new session high. Therefore, we start a new count. 1, 2, 3. We break down, we go sideways, we have to pop some tums, and then we finally break down and reach our 20-point profit objective. New session low. 1, 2, 3. We break above. If you're lucky enough to get long on that retest there, you're filled on your 30-point profit objective at about 2 bars. Okay. Here we are, 137 ticks, 60 ticks, 91 ticks. You guys, you do the math, you see the opportunity there in front of you. Now, why are you here? You're here to learn a simple, mechanical, done-for-you strategy for all markets in all time frames. This is the part that I ask you, have I fulfilled my promise? Have I fulfilled my promise up to this point? I don't know if it could get any more mechanical, simpler, easier. There's really no guessing when to get in, no guessing where the market is likely headed, no guessing where to get it out. If we had 100 traders looking at the same chart, we should have 99 seeing the same thing, right? There's always going to be one person that tries to make this rocket surgery, and we do not need to do that. We can keep things simple. But wait, there's more. The one weakness or drawback of 1, 2, 3 setups is that there are so many of them. How do you catch them all without spending hours in front of your computer? Well, what if the strategy was automated? What if the strategy was plotted onto your chart for you? Uh-oh. I think I lost the screen for a second, guys. Can you guys see? Let's see. Uh-oh. Had a little malfunction junction. Okay. How are we now? You find the chat box. Okay. I think, are we good now? Are we good? Okay. So, what if the strategy was plotted onto your chart? Let me see what this business is. Okay. And what if the trigger entry and targets were drawn for you? And what if your platform could scan the markets for you and tell you when there's a penny setup? I don't know about you, but I would say that would be pretty amazing. Remember the case studies we went over earlier? Remember the case studies? Crude oil. Now you see some beautiful lines plotted onto your chart. Well, what the heck are these beautiful lines? You guys are smart folks. You've already figured out the green arrow is your number 1. The red arrow is your number 2. The blue arrow is your number 3. Now, these white chevrons here that you see that are quite small, those are not buy signals, sell signals. That is waving at you saying, hey, we have broken below the number 2 point, or we broken above the number 2. Therefore, we have a setup. And when and only when we have that break do you get this blue line, which is your entry or breakout level, your red line, which is your stop or risk, your lime green line, which is TP1 or take profit 1, and the dark green line, which is TP2 or take profit 2. Now, you remember the take profit 1 is the distance between the high of the 1 measured to the low of the 2 measured down, and TP2 is 2 times the distance of TP1. Now, you might say, what the heck are all these green arrows? Well, these are new markets making new lows. It's saying, hey, we're making new lows. Here's a potential 1, 2, new lows. Here's a potential 1, 2, 3. We never break above, so we keep trailing down. We finally get that last 1, 2, 3, okay? Now, remember the gold chart. Here is the gold chart. Again, there's our 1, 2, 3 pattern. We break above the number 2, target 1, target 2. Here's our next setup, right? We're not getting anything printed in the middle because we're looking for new highs or looking for new lows. Here is the chart of Delta. There's your long, there's your short, there's your short, there's your long. It plots and populates entry, target 1, target 2, and risk for you, so you won't have to do any calculations. None of this repaints. So you put this on your computer, your charts, we're looking at the same thing, guys. We're looking at the same thing unless you start messing around with all the settings, okay? And this is stuff that I used to do by hand, do it manually for years. Imagine you're trying to day trade, looking to spot these setups And then you're going, well, okay, I think 5802.25 is the number two. Let me measure that down to the number one low. That is, 56.91. Let me do the math. 30.31 points, spot 50. Add that. Nobody has time for that. Okay, nobody has time for that. 5-minute chart of the NASDAQ. Here we are. We have a 1, 2, 3 top. We hit target 1. We hit target 2 to the tick, which happens to be a session low. New 1, 2, 3. We break above. We hook back up. We hit target 1. We don't hit target 2, but it's close enough for government work. We shouldn't have lost any money on the trade. And then we go sideways. New session low. This low, lower than this low. So we start to count over. 1, 2, 3. Market just nips its little head there above the number 2 high. We pull back. We trade back up. And when we come up, we hit target 1. Notice that we're making new session highs. New number 1 points. This clues is in that we may need to get ready to reverse. Well, we actually hit target 2, so we're flat. And now we do get a final setup. We get a 1, 2, 3. We break down. We come up. We hook back down. We hit target 1. We hit target 2. And we're actually starting to get a new setup, right? So is this training for you? Only you and you only can answer this. If you're brand new to the markets and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise we talked about, the indicator overload, the paralysis analysis, maybe you just want to add another strategy. Maybe you're already profitable. If you are, congratulations. Who doesn't want to add another profitable strategy and entry model to your system? If you need a specific step-by-step plan and avoid learning this all on your own, something that you could do part-time, this training could be for you. Like finding these ideas basically on autopilot. Long here in Holly Frontier, short in Holly Frontier, long here in Holly Frontier. Google, here's a short, there's a long. Could you sell this stock? Could you sell bear call spreads? Could you buy puts? The answer is yes, yes, and yes. 4-hour chart of the Canadian dollar. Identifying longs, identifying shorts with your entry, target, risk, all there for you. If you love to scalp, if you like to scalp, boy, you're going to love the 233 and the 610 tick charts, okay? You're going to find all kinds of ideas there for you, trading the ebbs and flows of the market there in the indices. Now, why do all the work when you can let technology do the work for you? This is me scanning for the 3S code pattern in 1, 2, 3 tops across the Russell 1000, stocks that are optionable, $20 a share or greater, and boom, what would take me days or weeks to find are now done in seconds. I've got watch lists that are constantly scanning across different asset classes, time frames, tops and bottoms, all at the same time to give me high probability ideas. Now, we've been looking at Think or Swim. This is the indicator and scanner component for TradeStation. This is the indicator and scanner component for NinjaTrader. This is the indicator only for TradingView. Because of limitations with TradingView, we only have the indicator giving you these signals here. Here we are on MetaTrader 4, 4-hour chart of the Euro Kiwi. There's your long, there's your short, there's your short, there's your long. We also have this built for wealth charts, indicator and scanner. We also had it built for Metastock, indicator and scanner. You can see how beautiful and clean these setups are. Now, we know there's no real crystal ball in the markets, but I like to view this as one that gives me my tool to scan the markets, locating these setups to find my entry, and then I manage that trade through the exit every single day. Now, you too can start profiting from these predictable patterns, starting with what we call the 3S code. So here is your offer you simply cannot refuse. All this programming, coding, software development costs well into the 5 figures. We're talking, 7 platforms, guys, 7 different coding requirements, hundreds of hours of testing. But I realized the original price of $3,000 was way out of reach for most folks. Hell, even $2,000, even $1,000. I mean this when I say I want you to be able to start on the right foot right now with a proven mechanical, no BS, no guessing, straightforward setup that you can literally take and use for the rest of your trading career. So we've made this absolutely and completely affordable today for those that are willing to take action and get in right now with today's special offer. We've opened up 25 slots. You're going to get lifetime access to the 3S Code indicator and scanner, 3S Code optimizer, weekly strategy and scan sessions, private Telegram room access, all of our bonus and quick start guys for a one-time payment of $397. Guys, you can get this right now. This is a one-time fee, guys. One time. There's no crazy renewals, upsells, anything that you own this for life. You get immediate access to 7 platforms of your choice. These are the platforms: Thinkorswim, TradeStation, Ninja 8, MT4, WellCharts, Metastock. You also get TradingView. Just note that there is no scanner because of limitations. If we have the ability to create a scanner for TradingView, you'll get access to that too. You're all grandfathered in. You go to tradestrending.net/code, and I think Silas has been so kind to put that into the chat. You can also call 502-383-1182. Those that like to purchase through PayPal, you'll see the big blue button there on the order form. You can finance through PayPal. If you like to buy PayPal because you're hiding it from your significant other, that's fine too. Just kidding. But we do have a PayPal option. And again, you're also getting access to our weekly strategy scan sessions. Every week, we go into the markets where we talk about our top setups we're looking at. We're talking about days, swing trading uses 3S Code, using options, trading minis, micros, so much more. We do a full top-down market analysis every week, delivering high probability, high value ideas so you can take that fish and run with it. Now, again, I want to really quickly cover the indicator scanner so you know exactly what this includes. You're getting a visual plot of the 1, 2, 3 top and bottom reversal areas, entry, exit, stop, target levels, all color coded. If you can customize it. If you want hot magenta rather than red, you want lime, dark green rather than lime green, you have complete flexibility on all of that. You can scan for setups only, or trigger only, or both. You can scan for tops, bottoms, or both. You can scan for intraday setups, swing setups, or both. You can scan across stocks, ETFs, futures, Forex, whatever market you want, or both. Now, one question I get is, what do you mean by setups only or trigger only? Okay, so if you're running your scanner and we have a 1, 2, 3 that looks like this, and we have a 1, 2, 3 that looks like this. This is setup. This is trigger. Okay, so these would be running scans for those that are in the process of setting up. This would run scans for markets that have actually triggered. Okay, you also get access to our 3S Code optimizer. This is where you can take the mechanical 1, 2, 3 top and bottom strategy and run different back tests across different inputs and settings that fit your best optimization parameters. Okay, we know back testing can lead to more profits. The optimizer is another tool that can help you progress in your trading. So here's me running the optimizer on crude oil in Thinkorswim. You can see the stats and results. Here we're running the optimizer on the British pound in TradingView. You can see all of our stats and results. Here we are running the optimizer in TradeStation. You can see all your stats and results. Here we are running the optimizer in NinjaTrader with all of your stats and results. Okay, there's a lot of different things that you can add in there for those that like to do so. Now, I'm also going to throw in some additional bonuses to make this an absolute no-brainer. You're going to get access to my chart pattern principle trading manual guide. This manual will help jumpstart you by teaching you how the market works, why markets move the way they do, who the players are, how to look at it and understand the market the proper way, bonus setups, how we use the power of seasonality to trade the pattern, and so much more. You're also going to get my 25 top option strategy guide. This is great regardless of your knowledge of options. I include this guide because I believe options are a very powerful trading instrument if you know how to use them properly. So it's important for me to include this so everybody can take advantage of options if they wish to do so and do it the right way using the 3S Code. You're also going to get access to our private Telegram channel, lifetime access, where I am posting ideas every single day across different markets, different ideas. I'm basically handing you fish on a silver platter each and every day. You're going to get lifetime access to that. And You can gain access to all this by going to tradestrending.net/code. Now, here's some recent ideas from our Telegram room. You can see this short there in Nucor. You can see this short there in Cardinal Health. Here we are. Here are some trade ideas in the E-mini S&P. Here we are in Moderna. And, you know, guys, this is an example of folks just taking action. Okay, you can have as many subscriptions and indicators and widgets and whiz bang things on your computer all day long, but the bottom line is, A, you need something that works, and B, you need to take action. And these are some examples of folks that are taking action. They've used the 3S code, they've used our methodology, they understand the process, they've taken action, and you're seeing results. And these are very humbling to see. They come in all the time. I want you to be our next success story, okay? And so here's how you can get started, guys. Trading the 3S code, tradestrending.net/code, or you can call 502-383-1182. You're going to get the indicator for 7 platforms, the scanner for 6 platforms, the 3S code optimizer, access to our weekly strategy and scan sessions, access to our private Telegram room, all of our quick start guides and bonuses, all for a one-time lifetime fee, okay? So what I'm going to do here, I've got a few minutes and before I turn it back over, and what I want to do is I want to answer your questions, and then I also want to take a look at the markets. So let me see if I can find my screen here, since I had that little wacky thing happen. Let me see if I can pull up a chart for you guys, and we'll get right to it. So what I'm going to do is pull up a chart. See here. Sorry, guys. Pull up. There's my chat. And can you see my screen? Can you guys see my screen now? Should be looking at a chart of TradingView. Okay. All right. So this is TradingView. And as you can see here, you should be able to see the last on this particular chart. You should be able to see the last 1, 2, 3, 4, 5 setups in 3S code. Okay. Last setups. And this is what I mean, that, you know, you can be scanning and flipping through whatever charts or markets you wish, even different time frames, and you're going to have these plot here for you. Okay, this is TMCI, and here we had a buy signal, right? It's going to tell you the price that you would have gotten in. There is the target. Notice the target 1 hits that and reverses. Here we are again. We now get a sell. It goes about 75–80% of the target and then reverses. So we have, you know, we have a complete, we have strategy guides, we have, you know, rules, best cases, all that kind of stuff. If you're up 75–80% to your target, you should be moving your stop to break even, right? Here we hit target 1, we hit target 2 and reversed. I look at some of your symbols here. We look at Apple. So here we pulled up Apple. Looks like I've done some analysis on this guy. So let me remove that. Here are your last setups in Apple. Okay, here's your last short. And so when would we expect to get our next signal? Well, we have to make a new high, or we need to make a new low down here. Okay, so there was your last long. There's your long. There was a failed short. There was a profitable short, a profitable short, and a profitable short. Okay, so why everybody, i.e. retail traders, are sitting there buying new all-time highs, we are looking at high probability reversal sells and high probability reversal buys. If we look over here at the yen, this is a trade our group took recently as well. We take a look over here at the Japanese yen. Look at the last 3 setups, guys. This was your 3S code buy here in mid-Jan. There was your 3S code sell. There was your 3S code buy. I mean, there is some serious money being made in those markets. You look at RTY, the Russell. Okay. If we look at the Russell, basically call the high of the move, right? We look at call the high of the move. The high of the move was 24.95. Got a short here at 24.45. There's target one, there's target two, and we're trading to the downside. Eli Lilly, daily chart. Here we are on Lilly. Let's get this thing to load. There's your last three symbols or setups: 1, 2, and 3. Yep. Boeing. Yep. So you get Boeing. So Boeing's getting hammered, right? Everybody's getting hammered. The retail traders were selling new lows, selling new lows. There's our last sell, hitting target one. There's the last buy, hitting target one. Here's the buy before that, went up about 60% of profit objective. Let's take a look at E-mini S&P. Let's look at our, actually took this long before I came in with you guys today. So I took this long right here at 57.61. You can see we came down here. We got a 3S code print, 57.61, target 1 at 57.71, target 2 at 57.81. So there's 10 points, there's 20 points. ACAM, 5-minute chart of gold. Sure. Let's look at, thank you, Al. You should receive your welcome email. Yeah, you should all receive your welcome email. Check your spam or junk folder. Let's look at a 5-minute chart of gold for you. Guys, just can't make this up. Guys can't make this up. Look at this. So here is a 5-minute sell in the European session. Comes down about 50 to 60% of your profit objective. Here's another sell, comes down 50 to 60% of your profit objective. There's your long setup here, right? 5 minutes into the cash open. Hits target one, immediately rejects. Then you get a sell signal right here. Target one, target two. You're welcome. Yeah, I appreciate everybody's that has joined. I appreciate everybody that has joined. We limit this because we want to take care of our folks. We take care of our folks. Dave, what's your pop your email address in there, and we'll make sure the team handles you. That's why we limit this. We want to make sure everybody gets exactly what they have come and paid for. We'll take care of you. We want you to enjoy your experience. We operate a real live human operation here. No AIs or no bots, even though I've been accused of sounding like a robot. But we'll take care of you, Dave. No problem. Anybody else, you can reach out to support@tradestrending.com, support@tradestrending.com. If you need any assistance whatsoever, you guys are on the fence, you need to ask questions, maybe you need to check with your spouse, whatever it is you may need to do, we are here to help you, okay? And I'll turn it back over to Fausto and the CTU team. Thanks so much for having me on. This has been a pleasure and an honor to be invited. Hope everybody is well over there. Take care, guys, and we'll see you on the flip side.
Silas, thanks so much for being here. It's good to see you again. And everyone take him up on his offer, Silas. Thanks for coming. Let me just bring back our splash page really quick right now.